How is everyone doing today? Welcome back to Crypto Express. Yes, that's right, stay focused. What we're about to go through may feel a bit uncomfortable if you're still waiting for the perfect moment to step into XRP. And that's because the setup we're discussing is exactly the kind of thing people later regret ignoring. Before we continue, don't forget to hit that like button. It really helps the algorithm push this video to more people. And if you haven't joined yet, now's the time to subscribe. Let's move straight into it, because what I'm about to show you has been seriously overlooked. There's a reason this discussion starts with Japan. Right now, Japan is moving toward a Bitcoin ETF. And before you scroll away thinking this is just another Bitcoin headline, pause for a second. This goes far beyond Bitcoin alone. We're talking about large-scale capital movement. Japan holds over $1.2 trillion in U.S. government bonds. That's not spare cash, that's institutional-level money, the type that reshapes markets. Most people hear that and dismiss it as boring bond talk. That's a mistake. This is where it gets important. If Japan even slightly reallocates a portion of that capital into Bitcoin, the entire top layer of the crypto market shifts. When Bitcoin's market cap changes, everything else follows. You already know the cycle. Bitcoin moves first, liquidity follows, then altcoins react. Let's keep the math simple. 1% of $1.2 trillion is 12 billion. That alone could push Bitcoin toward the 108,000 range. 5%, 60 billion, puts Bitcoin near 134,000. 10%, that's around 188,000. This isn't hype math, this is liquidity math. Once Japan reduces treasury exposure and actively allocates toward digital assets, Bitcoin stops chopping and starts trending. And you already know what happens after that. Now this is where preparation matters, positioning matters. This is why most people miss major moves. They don't plan, they don't set alerts, and they don't think like capital managers. That's exactly why the 100X Club exists. Inside, you get weekly high-growth alerts, early crypto insights before they go public, and a long-term wealth mindset designed for generations, not quick flips. You also learn how top investors position early and use systems that compound over time. The link is pinned if you want access. Now, let's bring it back to XRP. If you're using Zamin, you're with me. If you're part of the Flare ecosystem, this next part matters even more. There's active development happening between Flare Networks, Wheatsea Wind, and the XRPL Labs team. For the first time, XRP holders will be able to earn yield without giving up custody. No new wallet, no risky bridge, no sending XRP somewhere and hoping it comes back. You stay in control, always. Flare builds the yield foundation. XRPL integrates it directly into tools people already trust. Simple, secure, and efficient. Institutions care about returns. Retail cares about safety. This checks both boxes. This is how XRP shifts from something people just hold to something that's actually used. And when usage increases, liquidity grows. As liquidity grows, volatility drops. And when volatility drops, banks step in. Zooming out, Japan could redirect trillions. Bitcoin ETFs are expanding globally. XRP's foundation is improving. Real yield, real utility, and self-custody. This isn't random. Markets move in stages: accumulation, narrative, expansion, and distribution. Most people only enter during expansion, after prices are already up multiples. Then they wonder why it feels risky. This is what early liquidity actually looks like. Confidence matters more than perfect entries. The market doesn't wait for comfort. When macro liquidity aligns with real utility, price moves fast. The winners are positioned early. Big money doesn't buy tops, it builds quietly near the bottom, and the signals are getting stronger. Now, before we dive deeper into forecasts and charts, this is a reminder to book a planning call if you haven't. These are real one-on-one conversations, no scripts, no sales pitch, just clarity, entries, exits, and strategy. Because the hardest part of a bull market isn't buying, it's knowing when to leave. Let's talk charts. This structure is clean. Higher lows, controlled movement, no blow-off behavior. XRP is grinding upward. The all-time high is the gate, not the finish line. The real move starts after that level breaks and holds. Above the all-time high, there's no historical resistance, no trapped sellers. That's what price discovery really means. XRP hasn't had a true discovery phase since 2017, nearly a decade. Once momentum, funding, and narrative align, things accelerate. This is the part most people aren't mentally ready for. Big moves don't start with excitement, they start with boredom and frustration. The structure shows clear phases: long accumulation, compression, then expansion. We're transitioning now. Institutions don't care if they buy at $3, $5, or $10. They're positioning for infrastructure and long-term use. Retail focuses on price. Institutions focus on systems. That's the difference. The largest moves begin quietly, and right now, XRP looks controlled, deliberate, and prepared. As long as key levels hold, the trend remains intact. The first major area of interest sits around $2.50, followed by $2.75, then $3. Once $3 breaks, sentiment changes fast. That's when momentum returns and liquidity accelerates. ETFs continue hitting new highs. More are launching. Capital is moving quietly in the background. When XRP clears that zone, things change quickly. We've waited years for this phase. Patience turns into conviction here. This is the final reminder. Stay prepared, stay positioned, and don't let hesitation cost you the move.